webinars before. Again, this is going to be redundant because I go over this every webinar, but this is really important because what we're trying to find out is what moves the market, what moves the stock, what moves an index, why is the market moving one way or another. And a market consists of two different groups: retail traders, small retail traders such as myself and most likely everybody else here. We're these little barbels. And it's important to understand when retail traders are what is mostly in the market, all you get is chaos and chop. You don't really want to be in there when just the retail traders are in there. This is the institutions. This is what drives the market. Now, the institutions, when I say drives the market and when they're pushing it, the institutions don't have to be trading in the same direction. And when they're doing that, you're not really getting any kind of a force. But when you have multiple institutions and pushing a stock up or pushing a stock down, doing trading in one direction or the other, that's when you want to know about that. That's what the institutions, what's how tracking the institutions does for us. We can tell when they're in a trade and when they're not in a trade. Now, the institutions, just to understand who they're made up of. They're made up of investment banks such as Goldman Sachs, JP Morgan, Morgan Stanley, all these big investment banks, billions and billions of dollars to invest and trade, right? And they're in there trading every day. It's also important to understand that most of the trades that come through these institutions are not done by humans. They're not done by manual people sitting there clicking their mouse. They do have trade desks where they have folks that do that, but 85 to 90% of the trades that come through these institutions are algos. They're created by computer programs. Computer programs dive in on certain criteria that they've been programmed to look for. That can be news. They actually read the news and will drive the market based on the news they see. Just to kind of show you as an example, when you see some sort of a news event occur, like the Fed meeting on a Wednesday, when they come out with their Fed adjustment at 2 o'clock, whether they're going to cut rates, raise rates, whatever. At 2 o'clock, that comes out written. And if you look at the volume on the SPY or the Qs right at 2 o'clock, in about 1 millisecond, you're going to see this big spike in volume up or down, right? Because they've already read that. We don't even get time to even click a mouse to do that. Those are the algos that are reading the news and reacting to that. And they do the same thing with different indicators on the chart. They can create MACD crossovers and then bust the MACD crossovers, which they know what kind of trading strategies retail traders use, and they write programs to do that. There's hundreds and hundreds of different algos, and all the investment banks have them, hedge funds have them, and this is what drives the market. This is what we're trying to identify is occurring. So we are only in there when they're actually in there in force. Now, the institutions also include pension funds. Huge pension funds, police pension funds, firemen pension funds, state worker pension funds. Those are part of the institution group. So is hedge funds, hundreds and hundreds of hedge funds with billions and billions of dollars to trade with. And lastly would be mutual funds. T. Rowe Price, Vanguard, two big ones that have, again, billions of dollars to invest and trade. This is what drives the market. This is what we're using the SPY software system, SPY Super System software to identify when the institutions are in a particular stock in force. It's important for us to know that. We want to be there with them because we're going to take our money from these guys, these retail traders. When the institutions are moving up, they don't know it. We know it. That's when we get in. All right. So that's what drives the market. It's important to understand that. Now this is kind of a little bit off topic. I stuck this in a few weeks ago. Just because I'm trying to make a point here. This is a blackjack table, all right? Most people know blackjack. This is an ace and jack of spades. That's a nice little blackjack. Couple of $100 chips on here. Nice hand, nice winning hand for blackjack, all right? The reason I bring this up is when I first started trading, and I imagine a lot of you folks when you also started trading or talk to anybody about it, when you would talk to your family, your friends about it, what they're going to do is tell you you can't win. Trading stocks and options is gambling. It's fixed. You can't win, right? And so I'm addressing that with this analogy. When I was much younger, much younger, I made my living playing blackjack in Las Vegas in casinos as a card counter. All right, a card counting system gives me a mathematical edge over the house. I'm actually not counting individual cards. I'm tracking the big cards and the little cards as they're removed from the deck. I mean, that's the basics of card counting, is as the small cards are removed from the deck, the player has an advantage. As the big cards are removed from the deck, the 9, 10, Jack, Queen, Kings, and Aces, as those are removed from the deck, the house has a bigger advantage. So all I did was track the little cards and the big cards as removed, so I knew what the remaining composition of the deck was. So if the deck had a lot of big cards in it and fewer little cards than normal, I had an advantage, and I bet bigger. And when I had a lot of little cards in the deck and fewer big cards in the deck, then the house had a bigger advantage. I bet the minimum. All right, and there's also a basic strategy to play the game, but this was the key. And the reason I bring this up is playing blackjack's a losing game too if you do not have a methodology or a strategy to beat it. But this gave me a mathematical edge over the casinos. Trading stocks and options is very, very similar to this. And without knowing what the institutions are doing, the trader has no edge. So in essence, you're gambling. So in that particular case, it is gambling. You've got to have a way to have an edge. The SPY super system is, I call it my card counting system. This is what identifies what's going on under the hood in the market that day, as far as what the institutions are doing. This gives me an edge over other traders, allows us the ability to become consistently profitable, right? Because we can get into trades when the institutions are in there because we know they're there, and we can bypass those that they're not in, all right? So this SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits, right? Because once I know a stock is moving based on institutional involvement, I may have 4 or 5 or 6 of those, all right, that are pushing, the institutions are pushing up. Then I'm going to do some technical analysis to try to find the best one and trade the very highest probability trade of that group, all right? But this is why I talk about this. It seems a little off topic, but that's the difference. You can become a successful trader, options or stock trader, if you have a method that gives you a mathematical edge over everybody else, and that's what this does. Okay, a couple of rules to trade by that I follow in the room. Trade the best and skip the rest. Trade the best means we're only looking for very high probability trade setups. Skip the rest, we're bypassing trades that may look good but are likely to be not profitable or even losers because the institutions aren't in there. And this is an important step right here, this skip the rest, because this keeps us out of trades that would likely have been losers. And believe me, this is just as important as winning trades. If you can bypass trades that were going to be losers, you're going to really enhance your win rate and you're going to enhance your profitability. Second thing is, and this I mention in the room every day, our objective is not to make trades. Our objective is to make money. We're not trying to be a trader and just trading all the time. This is meant to keep traders from overtrading. Overtrading is one of the biggest drawbacks to most retail traders being successful. They trade too much. They just cannot sit there and watch the market. They have to be in something all the time. So I say this every day in the room. Our objective is not to make trades. Our objective is to make money. We do that by finding only the best trades and trading those. Okay. This is important. Maintain discipline. Now, when I say maintain discipline, what I'm talking about is we have a particular process that we follow. There's certain criteria that you have to see to find high probability trade setups. You need to learn and follow that, what those are. Maintain discipline means don't vary from that. Stay with the process. The process is going to make you successful in this, but you've got to stick with it. And so many traders jump back and forth from one strategy to another strategy to another strategy. They hear something on social media, they hear something on TV, some friend tells them about some stock. You've got to maintain discipline, very critical, and remain patient. Once you have a strategy set up that you know is going to work 85 to 90% of the time, wait for them to set up and then take advantage of it. And this is another thing that's very, very hard for retail traders to do, to be patient. I mean, a lot of days, some days this week, we didn't have any trades. We had some intraday trades, but we had nothing that we could take as an alert or put out on a swing trade because there was no setups. So we're always looking for trades, but you have to keep looking. So you'd be setting alerts, looking through watch lists, scanning for stocks, etc. But remaining patient is a hard thing for retail traders to do. They just get impatient. They haven't taken a trade in 2 or 3 hours. They got to find a trade, and then they're going to make justifications for taking that trade. They'll overlook things that institutions aren't in it, but everything else looks good. I'm getting in. It's getting next to resistance level, but I think it's going to go through it. They anticipate it, and this is a bad thing. Remaining patience is critical here to becoming consistently profitable. So as profitable traders, we need an edge, and we need an edge over the other retail traders. And our edges is the number one thing is the SPY Super System software. This is important to understand. Knowing when the institutions are in trades and when they're not is such an integral part of becoming a consistently profitable trader. Very, very important. And before I had the SPY Super System, the only way I was able to do that was I'd be looking at price action and volume. I mean, that's what that would tell you pretty much whether the institutions are in there, but it's not very accurate. There can be a lot of volume and good price action when the institutions aren't involved in the trade at all, right? The second thing, and this is something that's overlooked by so many retail traders, most retail traders don't understand this. Trading relative strength and relative weakness. Now, this is not RSI. Don't think that this is the RSI, the indicator for relative strength. It's not. I don't believe in the RSI indicator. I don't think it's any good at all. But what you do is you look at how your stock is trading in relationship to how the SPY is trading or the Qs, right? So if the SPY is moving sideways and down on a 5-minute basis, and you've got a stock that's stacking green candles, you've got a stock with relative strength. This is going to increase your edge on that trade. The stock is not going to fall as fast if the market reverses on you. If the market turns around, heads up and goes strong, it's going to outpace the market. That's relative strength. Relative weakness is just the opposite. If the market's going up or sideways and you've got a stock that's stacking red candles going down, that's relative weakness. This gives you an extra edge over other retail traders, and most retail traders, believe it or not, don't even understand this. They're looking for MACD crossovers. They're looking for using RSI. They're looking for basically just a bunch of different things that don't matter. This is important because this is telling you what my stock is doing relative to the market. And if you know at that point in time that your stock is also being traded by the institutions, it gives you a massive edge here. We trade with the market trend if there is a trend. You know, if the market is bullish for the day, we're typically going to look for long trades. Bearish for the day, we're going to look for short trades. Right now, the market is bullish overall on a daily basis, so we're leaning mostly to longs when we take them right now. We want to trade with the market. And the last thing is here is buy near support and sell near resistance. This again requires patience in traders. In other words, don't chase. The stock opens in the morning green and starts stacking green candles one right after another. So many traders get antsy and they've got to get into the trade. They feel like they're losing money. It's called FOMO. It's fear of missing out. When you're suffering from FOMO and you're chasing a stock that's gotten way away from support, you're trading on emotion. You may think that this is a smart trade, but you're trading with emotion. It's greed's taking over. And more likely than not, when you buy like that, when the stock's moving up fast and not wait for it to pull back, you're going to be buying somewhere near the top, and you're likely to get trapped in there, right? And you're going to get trapped in that trade as it turns around and heads back down again, and you're going to be freaking out because you're not going to know what to do. If you got to wait for it to go all the way back to support, you're probably going to lose a lot of money. Those patient traders that like that stock make note of it. They wait for it to come back to a support level like the VWAP or one of the moving averages, bounce off of that, go back into the original trend. Then they get in right near support, and on the short side, right near resistance. So these four things right here, if you're able to trade like this, you're going to have an edge over about 95% of the other retail traders who are trading, and there's millions of them around the world. Okay. Now the compass system, or the SPY Super System, as we now know, it now, it's been improved. It identifies the highest probability setups while sidestepping setups that look good but will fail more often than they succeed. Again, are the institutions in the trade? Again, it does this by identifying when institutions are driving the move and when they're not. It analyzes fairly complex trading data and displays the results in easily identifiable visual format. This is really important because if you're looking at a chart with 16 different indicators and lines on it, it's really pretty hard to do any kind of quick analysis on it. But when it's being shown like this, just in colors, all right, this visual element makes it possible for even new traders to find high probability trade setups. If you understand how the SPY Super System works and you've never traded before, and I show you what colors mean, you'll be able to tell whether institutions are in a trade or not in about half an hour of learning. So you'll be able to identify that. All right, so that's really important because what this does is this takes a new trader and this accelerates their learning curve. It gets them to the point where they can become profitable much more quickly than if they didn't have this. All right. So getting an edge over retail traders. What's our edge? We're only taking trades that are being driven by institutions. This keeps showing up, right? This is very critical. We trade stocks that have relative strength or relative weakness to the SPY or the Qs, and we trade in the direction of the overall market trend. Those three things right there are major, and most retail traders do not know this. They don't have any idea if institutions are in trades or not. They'll tell you they do, but they don't. They don't even know what actual relative strength or relative weakness is. And trading in the direction of the overall market, most traders understand that trading with the trend is better than trading against the trend. And again, how does it give us an edge? Our trades will be supported by institutional buying and selling. The stock will be outperforming the index, the SPY or the Qs, and the stocks will be moving in the direction of the overall market. I mean, it seems simple, but it's amazing how few people actually take advantage of this. Okay, now the SPY Super System software, I want to cover this just before I get into some more details here. Because we're going to show results. I'm going to show the results we had in the room. I told you we were 30 wins and 3 losses in July. I'm going to show results, but I want to remember what is causing us to get these kind of results, right? And it's the SPY Super System software that does it. The SPY Super System software, it's the critical element in finding and trading the highest probability trades. This is what we're doing, right? The SPY Super System software is the engine that drives our exceptional results. This is what does it. We use other things. We use technical analysis, other kind of analysis, but this is the main force behind it. The ability to identify when institutional players are driving a bullish or bearish move and when they're absent. It's the key factor in pinpointing high probability trade setups. The only real high probability trade setup you can have has to have institutional involvement. Because if it doesn't have institutional involvement, it can be reversed very quickly or chop around a lot. In other words, you're missing the main element that's actually forcing that trade up or down. And that is the function of the SPY Super System software, and it's the critical component. This is very critical, so I just understand that. All right, I do a YouTube feed, by the way, every day at 11 o'clock, around 11:15. I get on there because I'm in the room all day long. What I do is we share the room, so you can see my SPY Super System chart up. You can hear the questions that's being asked in the room. You can see the different stocks that we're looking at. You can ask questions. I'll answer your questions. It's just like you're in the room for an hour. It gets you a little bit of a flavor of the room, and I do this every single day. Okay. Now, one thing here, I put this slide in here, and there's a reason for this. I don't know if you've been trading. There's a lot of people that follow social media for trading. They go to Wall Street Bets, or there's all kinds of different sites out there, a bunch of different Reddit sites. They got news on. They listen to CNBC. They're listening to Bloomberg. They're reading articles in the paper. They're listening to friends. They're talking to other traders, right? And they're trading on stuff that they think they know, but they don't know, right? And this is the quote that I use to try to emphasize that. And this is from Stephen Hawking. And the greatest enemy of knowledge, it's not ignorance. Believe it or not, being ignorant is better than having an illusion of knowledge. So the greatest enemy of knowledge is not ignorance, it's the illusion of knowledge. Illusion of knowledge is thinking you know what the market's going to do based on something you saw, read, or heard. A lot of people thought the market was going to be bearish from April on. And there was a lot of people with a bearish bias that were shorting the market, shorting the SPY, not thinking the market, thinking this market can't go up under these conditions. There's too many things against it. You've got the tariffs, you've got troubles in China, you've got wars. The market's going to go down, and they traded that way. They were trading what they thought was going to happen. They did not trade what the market was doing. All right, that's very important. So remember this. If you follow the methodology, we are only trading what we actually see is happening. Right? If somebody gives me a trade and I ask them why they took that trade, if they tell me, if they use the word thought, saw, or heard, then they're trading off what they think, not what the market is doing. So I love this quote. It's really important. And people coming in that have no preconception of what the market might do are a lot better off than those people who come in with an idea they think they know what the market's going to do. Okay, a couple of questions here. Am I focused on day trading or swing trading? Lynn, I actually on both of those. I have a methodology for doing intraday trades for folks who want to trade intraday trades. And then most of the trades that we do, for example, that the alerts go out on, and a lot of the longer term trades in the room are based on swing trades. I'm basing it on a 5-minute chart for intraday trades and daily charts for swing trades. So we have some of each. We do all those. It's important to have some swing type trades for folks who can't do a lot of intraday trades. They're under pattern day trader rules. They don't have $25,000 in their account, or they don't have a cash account. Then they can only make 3 intraday trades in a 5-day rolling period. So that limits you. So most of the trades that I put out there will be based on the daily chart, which means if you can't intraday trade them, you can hold them overnight and they be on a day trade. So I do them both. Okay, I'm just going to throw this up here quickly. This is a SPY super system that I run on Thinkorswim. It also runs on Ninja, but I run it on Thinkorswim. The critical thing to understand is I get all my indicators off the SPY super system on Thinkorswim. This is where the indicators are going to be seen. This is where I make my determination of whether it's a high probability trade or not. But I don't trade on Thinkorswim. You don't have to trade on Thinkorswim. You get the software. The software is installed on Thinkorswim. You can just download Thinkorswim and have the software installed once you buy it. And it's going to look exactly the same as mine, but you can trade on any platform you want to. All right, doesn't matter if you're trading Tastyworks, you can trade Thinkorswim, you can trade Scott Trade, Fidelity, anything you want to. Interactive Brokers, any trading account you want. I use Tradier, but this is where our indicators. Now, the SPY super system, this is a 5-minute chart of the Qs. These are what the chart looks like. This is what the SPY super system looks like. Here's the information that we use, right? This is the actual oscillator. Now, this oscillator is not just a standard Laguerre oscillator. This has the divergence stripped out. This is down to just looking at pure momentum. Pure momentum is very important because pure momentum, if you understand how it should be looked at, can tell you a lot about whether institutions are in the trades or not. All right. Just for a quick aside, how you track momentum, a lot of people think if they see a stock moving up and it's got green candles, that's momentum. That's not necessarily momentum. Momentum is as you go from one candle to another candle, whether it be a 5-minute candle or a daily candle, as the price action closes for that candle, if the close of that price is closer to the high of that candle, and then the next one, the close is yet again closer to the high, and then closer to the high, that's momentum. When the price is moving up and getting closer to the high of the candle each time, that's true momentum, and that's what this measures. So we have the oscillator. This is current time frame momentum. On a 5-minute chart, this is the momentum on the 5-minute. This is multi-time frame momentum. On the 5-minute chart, this is 5 minutes, 15 minutes, and 45 minutes, all three. So it's looking at all three of them. And this is long-term trend, right? So those are the indicators that tell us whether the institutions are in there. You've got red and yellow for short or bearish, and blue and green for bullish. And you'll see a lot more of these, so it'll make sense to you. Up here in the price portion of the chart, we have a couple of key things. This on a 5-minute chart, this is the key, very, very key level you use. This is called the volume weighted average price, VWAP they call it, all right? Volume weighted average price. This is something that every institution trades off of. Institutions use the VWAP for getting in and getting out of trades all the time. This is the level that we use on a 5-minute chart, is our main support resistance level. If I'm getting into an intraday trade long, I want it to be breaking above the VWAP, right? Now, if the stock has moved away from the VWAP, then we also use the 15 EMA right here. This is actually a smooth EMA. It's a 15 EMA of an EMA, and this is this little red line. This would be our other support and resistance level that we use for entering trades on a short-term basis, an intraday basis. Okay, this is a pivot point. This white line. It's the only pivot point we use. There's lots of pivot points. This pivot point, the SPY super system calculates and puts in here. So when it's there, and it's not always there, when it's there, it's a pretty good support resistance level. I don't trade off of it, but if I'm in a trade, for example, if I was trading this spot Q short right here, as it comes down, as it approaches this pivot point, I'm going to be very cautious, and I'm probably going to take profits as we approach this pivot point because it's likely to bounce at that point, which you can see there it did. All right. These arrows here, these are called pop symbols, or pop out of the box symbols. These tell us when a stock is breaking compression to the downside when they're blue, and breaking compression to the upside when they're pink. That gives you a fairly clear picture. If you've got a break of the 15 EMA to the downside, you've got a current time frame momentum bearish, and you're breaking below the 15. Nice little entry right there for just a quick trade. But we'll go over a lot of these. All right. So those are the key things on this chart that are important. There's one other thing that we just recently added. This is called the vol here. This is a market momentum indicator. This tells us what the market's doing right now. In this case, it's on a 5-minute basis, which is how we look at this. What the market's doing right now. This can go in the same colors again. It can be trending down with yellow, or it can be trending down with red. That would be even more bearish. Or it could be trending up with blue, or trending up with green. That would be more bullish. This tells you which way the market is, the market internals are working. The market internals, just so you understand what they are, it's the total amount of volume on stocks that are moving up minus the total amount of volume on stocks that are moving down. It's a cumulative volume index. All right. So it's telling you what the total volume is at that point in time in the market, whether there's more stock being sold or more stock being bought. Right here, it's saying that more stocks are being sold right now, volume-wise, and it's moving down. So when this is moving down, then especially it gets to red, if you're doing an intraday trade, you kind of want to look at short at that point in time. You want to trade, with the market. I mean, basically, you're trading with the market trend, and this gives us a good idea of what the trend is. Yesterday, there was a situation where the market internals were bullish as heck. I mean, they were shooting up. Yeah, this trend went from trending down to trending up in green in no time, and the SPY was dropping down. And as soon as the SPY get down to the VWAP, I took it long because I suspect we were going to get a bounce up, and we get an immediate bounce up off the SPY just because it was going back into the market trend. So this is very, very useful. It's on the 5-minute basis, very, very useful. Would that be the OBV? No, it's not the actually on balance volume, but it's what's called a cumulative volume. It's a little different, and what it's just doing is it's taking a look at all the stocks that are moving up and taking that volume, and all the stocks that are moving down and subtracting that volume. That's what it does, and that gives you a pretty clear indication of what the market direction is. And it's obviously impacted. That's all the New York Stock Exchange, so it's a lot of stocks. Sometimes when the volume is moving up, you've got an uptrend here, and the SPY is moving kind of like sideways. The trend isn't going up really strong, but it's moving up a little bit. It could be because the Russell 2000 has got a lot of up volume in it, because the different indexes will trade a little bit differently. But this is a very, very helpful. We just added this. This is, I think, is an extremely useful indicator to use during the day. Okay. Let's move ahead here. I'm going to just show you, before we get into any more, I'm going to go over a couple of charts just so you can see how we use these on a 5-minute and a daily basis. This is a trade we took fairly recently here in NVIDIA back on August 8th. This is a daily chart. This was going to be a swing trade for us. All right, so I'm looking at the daily chart. What's important on the daily chart is you want the current time frame momentum here and the multi-time frame momentum here to be aligned. You want them both to be green or blue for long, or red or yellow for short. They don't have to both be green. In other words, if you've got a blue here and a green here, that's a line. That's still bullish right there, right? But this was, you can see that the institutions, this tells me the institutions are buying the heck out of NVIDIA through this period of time right here, right? So what we looked for was what's called, we call it a PBO in the room. This is a pullback opportunity. A stock that's strong, that pulls back to a support level and bounces. PBO is pullback opportunity. We got in it right here, because we had volume, we had the institutions buying across the board. The trend was long. We got a pop right here off this. This is a 15 EMA. It moved up. We took the trade right here on this candlestick. All right, during that day, we rode it up. It didn't do much the next day. Kind of flapped around the next day and then bombed. It popped right here. This next day, it picked up right here, opened here, flipped up here in the morning, and we took it off right there immediately. 32% profit in basically from 8.4 to 8.7. But that's what we look for on swing type trades, right? There are other things we look for, but that's just, you can see how the indicators are telling us that was bullish, right? This was SMR we ended. This was back again, I think in May. This was a 56% profit trade. This was also a daily chart. So this was a swing trade, right? we're just looking at the daily chart here. This was earnings. This was the stock moving up. Now notice, we had green here in the current time, multi-time frame momentum. Institutions buying, trend was green, but down here, we're going to see how this went yellow when the earnings came out. That was a little bit of bearish. So on the current time frame, the daily time frame, the institutions were not buying here. But then they switched right back to buying the next day. That's when we took the trade. Everything was green. We jumped in here. We get in on 513. We get out on 515. A 56% profit. 2,000 invested created $1,170 profit. And I use 2,000 invested just as a baseline, just so I get something to use, so I can track results. You don't obviously use that. You don't even use the same amount every trade, but that's what I use, so I have a baseline on here. All right. So that was SMR. This was Tesla. This is a 5-minute chart on Tesla. Okay. So this is an intraday trade on Tesla. Now here's where it opened, right here on a Friday morning. See this big green candle right here? Notice that the current on a 5-minute chart, by the way, we're only interested in this current time frame momentum. This is all you need to trade intraday trades, the current time frame momentum, because you're not going to be holding it overnight. You just want to trade for a few quick candlesticks. All right, so it went from yellow, from red here to blue here, buy. So they were buying it right here. So we wait till it gets above the VWAP, which it did right here. Here's the VWAP. This is where your entry is for Tesla, Tesla right there. Right there, it's bullish. Institutions are in it. We take it right there, and we ride this thing up, and we ride it up, and as soon as we start to see momentum loss, we take it off right there. That's the trade for you, and that's a pretty nice trade. It's from about 298 to about 307. That's $9 in a one contract of a call. All right, so that's how we do that. You can see it switch back to yellow here, then red. You can see you don't want to be in this long when this happens. All right, and this was a trade of the SPY. This is what we call a SPY super system trade. This is a methodology where we use the indexes. We trade the indexes, the SPYs, the Qs, the IWM. This was a SPY trade on a 5-minute chart. All right, so here it is about 11 o'clock. It's bearish. It's coming across the VWAP right here about 11:10. It goes to bullish. Institutions came in. Notice it detected that. Look at the price reflecting that. We buy it right here, all right, and we just would ride this thing up, and the VWAP would be our stop. And once it gets away from the VWAP, the 15 becomes our stop. You just ride the momentum up, and as soon as the momentum starts to shift, you take profits right there. That's where you would take profits. I mean, you could have stayed in it because it was still green, but I would have taken profits there. And then when it switches to yellow, you're out of the trade. All right, that's the SPY super system trade. That's the 5-minute chart. That's how we use these indicators, that the SPY super system is telling us what the institutions are doing. This is extremely critical to know what the institutions are doing. This was a Wendy's trade. Again, daily chart, swing trade. You can see what you've got here. Multi-time frame momentum. The institutions are selling the heck out of it. Here comes the earnings right here. See how this is blue? Even though it dropped down, there was some institutions buying here. Then they went away. And this is where we took the trade right there. We wrote it down the next day, one day, in here, out here, and done. Right? That was a swing trade on Wendy's. That was one we alerted on. All right, so just kind of something to make us smile. This is a trader who doesn't have the SPY super system. This is a guy who just traded FOMO, for example. He jumped into Netflix because it was going crazy out of the open in the morning. Somebody on social media told him, you need to jump in this thing. It's going up 20% today. He jumped into it. And then what happens? About 2 minutes after he gets in, the thing reverses and starts to flush back down again to where it opened. And this is how he feels. This is what trading emotionally feels like. And if you've traded, you probably go through this. This is what you want to eliminate. You don't want to be trading emotionally. And if you're trading FOMO, fear of missing out, you're immediately trading out of emotion. And this is somebody who's got the SPY super system, or somebody who has a methodology they follow. They're not trading FOMO. They're waiting for a stock to pull back to support and bounce back into the trend and getting onto it. Big difference, but this is what a lot of traders go through. It's very, very stressful. And one of the things I try to do in the room is keep the stress levels down. Try to be very methodical about what we trade, when we trade them. Try to not get excited about 5-minute candlesticks that are whipping back and forth if we're in a swing trade. You got to try to take emotion out of that. And I try to keep the room, a lot of rooms, they have cheering on it when the stock's going up. They're shouting at the chart stock to go up, or they're short, they're yelling at it to go down. But listen, that doesn't make any difference. All it does is get you emotionally involved in the trade and you don't want to do that. Okay. Process precedes results. I talked about the process, which is the methodology that we use to find high probability trades. What I'm saying here is the process is going to come before the profits. You really have to understand that trying to judge your especially initially when you're fairly new, trying to judge how well you're trading based on what your P&L is going to be a big bad problem for you, right? Because learning these high probability criteria and strategies, it's got to come before focusing on P&L. Focusing on the P&L without having a solid process to follow is going to end in failure. Trust me, it will. You don't want to be focusing at your P&L. I don't even look at my P&L during the day. I focus just on the technical setups. Do institutional traders use fake out breakouts where they maybe suddenly, let me look at this, then suddenly sell short thereafter? Yeah, they do. What they'll do is, this is why you want to wait for confirmation, Richard, on any kind of a trade. If a stock breaks through a resistance level, for example, if you jump into that on the first green candle as it goes through there, that's called an anticipation trade. And anticipation trades can work okay because you're getting in early, but the problem is they fail more often than a confirmation. So you want to wait for that stock to go through the resistance level, come back, bounce off of it, and head back up again. That becomes a confirmation trade, and that's much less likely being influenced by institutions. In fact, they're most likely still in it. And they'll do this. Listen, the institutions will do this with their algos. They have algos that go in there and they create MACD crossovers. They'll create MACD crossovers, and they know retail traders jump on MACD crossovers. They'll wait for the retail traders to get in there, and then they'll flush the thing right back down again and take them all out. And they, of course, know where everybody's stops are. So I don't use any hard stops. You don't really want to have hard stops on your trades. I know that people preach that you should have hard stops, but the institutions, they know where those are. And they'll flush a stock 2 or 3 cents below your stop and take it out, and then it'll bounce right back up again, especially if you get some kind of a news event in the day. So you just want to be aware of it, but you want to have a mental stop in your head, but you do not want to have you don't want to have hard stop. A trailing stops are fine, Richard. When trailing stop is a stop that you put on a trade, if you're profitable and you don't want to take it off right then, you want to see if it'll run up some more, and you put a trailing stop. So that way, the trailing stop will take you out if it reverses back down again. And if it keeps going up, you add to your profits. Trailing stops are fine. I'm talking about a stop to end a trade based on a technical setup that breaks. You got to give it a little bit of time. Okay. Okay. So, and this, I just throw this in, and this is just an educational thing for folks. A lot of people don't know what this is. It's called the OODA loop. This is observe, orient, decide, and act. Right? This is what institutions use. This is what the military uses. It's basically a thought process that forces you to go through a step-by-step process. Observe, we use our scans and watch lists and news to identify prospects. That's the observe portion for us as traders. Orient, we identify whether the prospect meets the high probability criteria on the daily and 5-minute charts, identify support and resistance levels, know the next earnings date, check option chain for pertinent information, weekly and monthly expirations, etc. Now you've oriented yourself. Then you make a decision. Make a decision on whether this trade qualifies as a good high probability trade setup. Once you think that one does and it's the best one, act. Make the trade. Try to avoid analysis paralysis. Go through your step by step and take the trade. Okay? There's not a lot of them that come in each day that meet these criteria. All right, this is the basic high probability trade setup stocks trades that we take in the room. Yeah, this is I call the trade setup funnel. This is obviously a virtual funnel. This is something you threw in your mind. First thing I do when I look at a stock is I look at the daily chart. I want the daily chart to be bullish if I'm going to swing it. And when I say a swing trade, I mean a trade that you put on at 10 o'clock in the morning and you might be taking it off at 2 o'clock in the afternoon. That is more of a swing type trade, even though it's a daily trade. I want the daily chart to be bullish if you're going long, and bearish if you're going short. Don't trade against the daily chart if you're going to be taking a swing trade, because you're trapped. If it goes against you, you have no ability to stay in the trade. And then you want the 5-minute chart to align. So you'd like to get into a trade when the daily chart's bullish and the 5-minute chart has become bullish. Trade with the trend, both the stock and the market. Again, if you get a market that's trending up, take a look at stocks that are bullish that day. You know, you can make some notes on some shorts in case the market turns around, but try not to trade shorts when the market's trending up. Trade longs. Now, this is the key one right here. This is the SPY super system must align. The SPY super system that we just showed you, this has got to show you that the institutions are in the trade. If the institutions are not in the trade, either long or short, that negates the whole thing. Without the SPY super systems being in your favor, to the long side or to the short side, that immediately kicks that stock out of contention. Now, once you've met these are criteria: relative strength and relative weakness. So, you know, let's say you've got 5 stocks that look good long. Take the one that's got the best relative strength versus the market, as long as it's got some room to a profit target. Don't take something long if the stock is 20 cents away from the 200-day moving average on the daily chart. Too much resistance, too close. But you want to trade the stocks that have the best relative strength. We've talked about this. And enter near support and sell near resistance. Very important. This is get you in at a price close to. If it goes against you, your losses are going to be very, very small. All right. And this is the same thing written out. Just it'll be on the video. SPY super system indicators must align in the direction of the trade. Stock to be traded should have a daily and 5-minute chart align. Key things right there. Now, on 5-minute charts, when you're trading intraday trades, this is important. The stock price should be above the VWAP for long trades and below the VWAP for short trades. Don't be taking long trades on stocks that are above the VWAP. Shorts, don't keep taking shorts on prices that are above the VWAP. The institutions are buying those right there, most likely. So don't be shorting those stocks. Go long and go short when they're below the VWAP. That's one thing that's important to understand on the 5-minute chart. All right, now in the room and in the alert service, here's what we do. These are the strategies we use. Straight calls and puts. They're fairly straightforward, obviously. Buy calls, we buy puts. I recommend buying in the money with the deltas of about 70, between 65 and 75 delta. And so they're always in the money. Don't be taking out of the money, please, puts and calls, please. And we do straddles and strangles. These are non-directional trades for stocks that we're looking to make a big move up or down, but we don't know which way. Maybe a stock that had some news event that come out and the stock shot up 30%. We'll take a straddle on it or a strangle on it. We don't care if it continues to move up or if it turns around and heads back down again. This is very, very successful strategy. I have a very specific criteria I use for straddles and strangles. We use debit spread using weekly options expiration. Debit spreads, if you don't know, is if you're going with a call debit spread, you buy a call that's like at the money or slightly in the money, and then you sell a higher price call to create the spread with the same expiration date, and that would be that week. And so you get into the trade much cheaper than you would if you were taking straight calls. But weekly debit spreads are much more effective than using 2 weeks, 3 weeks, 4 weeks out. I can tell you that from my experience. We do time spreads over earnings. We had some really good time spreads this last month. This is a non-directional trade again that we take over earnings. What we're looking for is to capture what's called volatility crush. Before earnings come out, the market makers push up the price on the puts and calls, make them expensive because they don't know which way the stock's going to go or which direction it's going to go in or how much it's going to move. So we're able to structure some time spreads over earnings, which we typically get in just before earnings. Like if they have earnings that evening or the next morning, we take them in the afternoon and we get out the next day. And we've had very good results. We've had 7 of them this month in August. We had 6 winners and 1 loss. It's pretty good. We also have a weekly ATM strategy, which we just actually put one of these on. This is a strategy to capture premium by selling puts against a neutral or bullish stock while maintaining a further out in time long put. In other words, this week, for example, we did a weekly ATM in Alcoa. All right. So we sold this coming week's $32 put, and we bought the $30 put out in October. It gives us a lot of time. That $30 put will just sit out there. Then our intention is to keep selling $32 puts against it week after week after week to bring in premium. Right. This is a very good strategy when the market sets up for it. And we just did this one. We've got one on right this week in Alcoa. And then we do credit spreads to capture premium. It's a fairly common strategy right here. And the last one we do here is called SPY Super System for very high probability trades. This is an intraday trade off the SPY, the Qs, the IWM that we trade using the SPY Super System that I showed you on the 5-minute chart. These are trades that I take. I can't really post them. I can't send them out. These I take in the room, but a lot of traders use them. It allows them to take a lot of trades during the day that are all high probability trades, but very quick trades. All right. And the Compass Option Alert Service, it's designed for day trades and short-term swing trades. It's not an investment service. Designed for traders who can't watch the market all day. You're going to get real-time alerts on the highest probability trade setups, and the highest probability trade setups are institutional involvement in the trade, market internals in our favor, and we do technical analysis to find the best ones. All right, so those are the basic setups that we do on the alert service and what we do in the room. This is my equity curve. Again, I don't have to brag about myself or anything. It's important. How you guys do is a lot more important than how I do. But this is my equity curve for this year so far, based on 2,000 per trade. That's not necessarily what I trade, but it could be more. But if anybody traded 2,000 in the room, this is where you would be at the end of July. Okay. All right. Now we're going to talk about Heiken Ashi candles. All right. It's going to take a little bit of time to talk about Heiken Ashi candles, but I think it's really important because it's something a lot of traders might have heard about, but don't really understand the best way to use them. So I'm just going to be fairly simple. All right, so trading Heiken Ashi candles with the SPY Super System. All right, so this is a chart. This is the British pound, Japanese yen. This doesn't matter. It could be Tesla, it could be gold, it could be the SPY, it could be the Qs. These are Heiken Ashi candles, and they look similar to a regular candle, but they're not. All right, they're constructed differently. Notice these candles that are red with flat tops. Anything with a flat top is a Heiken Ashi bearish candle. That's a bearish Heiken Ashi candle. Every flat top is a bearish Heiken Ashi candle. And see how they keep coming down with flat top, flat top, flat top. Notice that the beginning of each candle starts in the middle of the previous candle. Okay, just for informational purposes. That's because of the way they're constructed. But these are bearish Heiken Ashi candles, and you can see a nice trend coming down here. Now, what we're looking for is the ability to find, perhaps we want to trade this long. It's coming down to a support level, and we want to get into this long. So we're watching this come down, come down, come down. And then we're looking for what's called a Heiken Ashi reversal. Reversal from bearish to bullish. What would that be? Well, this would be a Heiken Ashi reversal candle right here. Notice we went from flat top red candles to flat bottom green candles. A stock with flat bottom is a bullish Heiken Ashi candle. All right. Now, I want to cover something right here because this is kind of important. This right here is a Heiken Ashi reversal, and it probably would have worked, but it's not one I would take. And the reason is there's one caveat to these Heiken Ashi candles. When you're trying to get into a Heiken Ashi reversal, all right, and you've got these candles coming down and reverses back up, the Heiken Ashi reversal candle that you get, the bullish one, it should be at least as big or bigger than the candles that created the original trend. See how big these candles are coming down? This candle is not big enough, in my opinion, to take the trade. You still would have made money, but I'd be waiting for a better Heiken Ashi reversal. So it comes back up, and lo and behold, it comes back down with a bearish Heiken Ashi reversal, and then you get this wick and tail, and here's a flat bottom candle. This is a big Heiken Ashi reversal candle. This is your Heiken Ashi reversal to get back into the trend right here. If you were waiting for a break to get back into the original bullish trend, here's where you take it. Look at the size of that candle. It's a huge candle. It swamps all these other candles. That's where you want to get in. So you get in here and you notice what happens. Flat top, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. Beautiful Heiken Ashi reversal candle with beautiful trend on this thing. Get a couple of wicks and tails, but still green. Another flat bottom. This was considered a Heiken Ashi continuation candle. And then a flat bottom, flat bottom, flat bottom. And this is where you take your profits. We're getting wicks and tails with a red candle, you're out. But see how easy that trend is to identify using Heiken Ashi. See how easy that trend is to identify using Heiken Ashi. Right, so that's what you're looking for. Flat tops, bearish, flat bottoms, bullish, all right? So there's the distinction of the Heiken Ashi candles. Bullish Heiken Ashi candles have flat bottoms. Bearish Heiken Ashi candles have flat tops. Bullish Heiken Ashi reversals are identified by flat topped Heiken Ashi candles, followed by flat bottomed Heiken Ashi candles. And this is the most common one that's going to be used. looking for a stock to pull back to support and then bounce and confirm that it's going back into the trend. And bearish Heiken Ashi reversals are identified by flat bottom candles, followed by flat top candles. All right, that's the distinctions of these things. Just kind of run through some information. That the reason they look the way they do is they actually combine the open close data from the previous period with the open high low close data from the current period. That's why they always start in the middle of the previous candle. All right, and it translates to average pace, and that's pretty much it. Again, here, understanding Heiken Ashi candles. Again, now here, what we just looked at, here's the trade we just looked at a little while ago. Again, you'll see here the downtrend, and then you'll see the reversal with the smaller candles. Now, I want you to visualize this blue line here as being, for example, the VWAP on a 5-minute chart, right? And you're waiting for stock to break above the VWAP to go long, right? But you want to do it on a Heiken Ashi reversal. Well, you get a Heiken Ashi reversal right here, right? This went through the VWAP. This is where you take the trade as it breaks through support, or resistance, in this case, the VWAP, and then you've got a nice flat bottom, get a couple of little dojis here, but they still break down below the VWAP, and then you ride this thing all the way up, just like this, flat bottom candle after flat bottom candle after flat bottom candle, a beautiful trend. And then you start to get a little choppiness, and then you're out. You start to get these red candles up here at the top, you bail on this thing, right? You're quite a ways away from the VWAP. That's a beautiful trade. That's what you're looking for, right? And I have a video on these. If you're in my room or in my alert service, I have a video on Heiken Ashis and how to use Heiken Ashi candles for confirming. It's important to understand that Heiken Ashi candles inherently are confirmation of a reversal. Because they have two candles, if it comes down to a support and then bounces, and the bounce is a Heiken Ashi candle, that bounce is be confirmed to go back into the trend. They have confirmation within them. This just talks for tips about using Heiken Ashi candles. All of these things apply to any trade you take. Examine nearby support and resistance level. Make sure you've got enough room to the upside or the downside to generate decent profits. Align the trade with the current market trend to increase success, and choose a stock with relative strength and relative weakness. Same things we've been talking about as far as that criteria is concerned. All right, so again, here's the distinctions we talked about. You've seen that already. The advantages of the Heiken Ashi: smooths out price action, as you can see, reducing noise, makes identifying trends much easier. This is the key right here. Improves identifying confirmation of trends or trend reversals. It basically inherently, a Heiken Ashi candle is a confirmation of a reversal because it makes two candles as opposed to a single candle without Heiken Ashi. And it does help identify exits when the candle bodies shrink or reversal occurs. Okay. I'm going to show you a few charts here now with the Heiken Ashi candles on them. Some that I've copied and some that I'm going to go back to some live charts. This was Uber. This was back in 2023, but I want you to see something here. This is Uber with regular candlesticks. Now look here on May 1st. And look at this gap. You see this gap up, and then another gap up, and then a nice move up. All right. This is what happens is a lot of times when you get a gap like this, it's hard to buy because it looks like it's extended on a big move like that. That's May 1st. So these are regular candles. Let's switch this. Now remember, here's May 1st. Let's switch to May 1st on Heiken Ashi candles. Couple things you notice right off the bat. Here's a Heiken Ashi reversal candle on May 1st, right there. This is where you would take the trade, right? You get this Heiken Ashi reversal. It's a confirmation of the reversal, right? But notice what's missing. No gaps. See the gaps here? Heiken Ashi candles fill the gaps. There is no gaps on Heiken Ashi candles. So this is where you would take the trade right here on the flat bottom. Notice we get flat tops. Heiken Ashi reversal, boom, right there. You take it here and look at this trade. It goes flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. All flat bottoms here, and then starts to roll over. Now this is my TC2000 chart, not the SPY Super System chart. But I only do that because I color my candles on my TC2000. I color them blue for compression breaks. If compression is breaking at the same time, I color them blue, and I color them pink if the compression is breaking to the downside. But basically, you can see what they did right here, right? But that's what you're looking for. All right, so I'm going to look at some live charts, and I'm going to look at them on our platform, SPY Super System platform. Okay, so let me bring up the SPY Super System. All right, here it is. Right, this is these are some scanners that we've got. This is a relative strength scanner, relative weakness scanner, swing trade scanner. We've got several scanners that go with this. But here is some stocks that we're looking at. Now, I have a couple I picked out that I wanted to look at. XMTR is one. Now, this is a daily chart on XMTR. I'm going to look at these in a daily chart. Now, if I switch the style, right, these are candlesticks. So if I switch the style to Heiken Ashi, that's all you have to do, switch it to Heiken Ashi. This is going to show me Heiken Ashi candles. All right, now I want to kind of zoom in on this a little bit. All right, now this, you see how we had little wicks, little tails here, very tiny one here. This is a Heiken Ashi reversal candle on XMTR, right there. Now, what does it tell us? It tells us the institutions are in buying this. That means this is a good potential long swing trade right here, because we've got a Heiken Ashi reversal. We've got everything green. It's basically coming out of a compression. This is a beautiful trade to the upside of XMTR. All right, that's what we look for. EXPE. Is XPE with Heiken Ashi candles. Right? See the wick and the tail here? See the flat bottom right here? This is actually a Heiken Ashi continuation, because you see the Heiken Ashi candle here, and then another flat bottom, and then you've got wicks and tails, and then you go with another flat bottom. This is a Heiken Ashi continuation, but this is a beautiful trade for Monday for a long if it opens green. And you see it's telling us that the institutions have been in buying this thing for several days now. Right? That's what we look for. Let's see, a couple more they want to show you on the platform. This is QDEL. This is another long. You can see the wick and tail and then a flat bottom. Again, this is another continuation. Market's been pretty bullish, so there isn't an awful lot of reversals, but this is a continuation. It's moving up, flattens out. Here we go again. Another potential long for Monday right there on QDEL and PRVA. And I'm going to show you a couple of shorts. So that's what you look for. This is PRVA. Big green candle, Heiken Ashi candle on Friday. Big move up on PRVA right there. Right, so that's, and again, it tells us that the multi-time frame and current time frame are both green. Everything's okay to go long on PRVA. We'll look at a couple of shorts right now. Let's see, FRPT. All right, this is a fresh pet. Right, fresh pet. Now look at how, this is a daily chart. Look at how much selling has been going on in fresh pet. We're trying to find an entry level for it. You could have probably taken it right here. See the wick and the tail and the flat bottom, flat top right here. This is a beautiful continuation for Monday right here. Fresh pet to the downside. Really nice. ENVX, another good short. And I'm just trying to show you the structure of these Heiken Ashi candles. Oops. ENVX. And these are live charts. This is actually live chart from Friday. This is Friday's close of the market. See the ENVX, see this breakdown right here? Flat bottom, flat top right here. We had a wick and a tail here, a tiny little wick here, and then a breakdown. And notice red and yellow, bearish on the institutions selling the heck out of this thing. Looks like a beautiful short, as you can see on the daily chart here. And I'll give you one more short here. OLLI, Ollie. Again, short across the board, red and yellow, bearish. Look at this candlestick here, and then look what we got right here. This is I can actually, it's not really a reversal, it's a continuation to the downside. So that becomes a really nice trade. All right, so that's what we're looking for in Heiken Ashi candles. Now you can use the same strategy on 5-minute charts to find Heiken Ashi reversals during the day to find a trade. Like if I had Heiken Ashi candles here on Ollie on Friday, see how it's coming across the 15, and you see the pop out of the box symbol right there to take a short, and it's red right here. We'd only be using the 5-minute chart. It's red right there. That's where you take it. You take a short right there. You just ride this thing down. Could have ridden it down all afternoon. Nice little short. That's what you look for on stocks. And it's, some of them are going to have some good ones. Some going to have bad ones. Here's Tesla right here. Tesla, you see, went from buying right here to selling right here, and then you come with a pop out of the box below the 15 to the downside. Take it Tesla short right there. So this is kind of real time of what you look for on the 5-minute chart to find these trades. All right, so that's what we look at on those trades. All right, any questions here? Let me see if we have any questions. Richard, how do I define the market? Did I understand you say you use the S&P 500 in? Yeah, typically when I'm looking for Heiken Ashi, when I'm looking for relative strength and relative weakness, I'm really just looking at how the stock I'm looking at is trading in relationship to the SPY, the S&P 500. Okay, so that's how I determine it. You can look at the Qs. You know, if you were trading a Nasdaq stock like Apple or you know, Meta or Amazon, you could check your relative strength relative to the triple Qs. It's going to usually be about the same. Okay. Samuel, is the system available in the trading view? It's not. It's available on Thinkorswim or in Ninja. Those are the only ones that's available on. Lana, how do I scan for which stocks to trade? Well, I have scanners here. I just showed you some of the scanners. I have a few scanners in here for relative strength and relative weakness. I have other scans that look for those pop out of the box symbols. And I also use TC2000. I use TC2000 as just a charting program, which I have scans on where I look for other multiple conditions, Heiken Ashi reversals, lots of different conditions that I look for. And I've got folks in the room, of course, that are looking for trades all the time as well. They're using scanners. So I'm using scanners looking for specific setups, both here on TC2000. I mean here on SPY Super System or on TC2000. There's a type of a candle, Heiken Ashi versus regular, affect significantly the affect VWAP line. No, it won't change it at all. It doesn't change the VWAP line. Now the price on that's going to be presented on the chart with a Heiken Ashi candle is going to be a few cents different, but the VWAP won't change. You're welcome, Lana. There's lots of scans that'll find these. I have tons of scans on TC2000 that I use. A lot of times during the day, I'll run the TC2000 chart that I'm using. I'll write it, move it over so we can look at what we're looking at. Like if I was looking at Tesla here, you know, I could slide my TC2000 chart over here and switch to Tesla on a 5-minute chart right here, and I can see exactly what Tesla looks like during the day if I go back and look at it. This is after hours. Here's Tesla during the day, and I can see what's going on here as well. But this, I just show this so I can show usually on a daily chart how the stock looks. This is what Tesla's doing right now, right? And some of those stocks I looked at, we looked at Freshpet. Is Freshpet. See how it's breaking down with a Heiken Ashi candle to the downside right here. I've got a Heiken Ashi candlestick right there. That's how I find these things. And I use my TC2000 to do some additional technical analysis. All right. Let's go back to the presentation. All right, and we looked at some of those. We're going to talk about now, I want to talk about the results that we've had with the SPY Super System. Is the SPY Super System now available in TradingView? It is not. It's only available on Thinkorswim or on NinjaTrader. I use it on Thinkorswim. It's the best one that you can put it on. I think I love the way it looks. I love the way it works out there. It works really, really nicely. It does not work on TradingView or TC2000 or any other platforms. It's very specific. But again, you don't have to trade on any of these platforms. Again, TradingView is okay. I like TC2000 much better. I've used them both. I think TC2000 is a much better charting program and then scanning program than TradingView, but a lot of people love TradingView. Okay, so I'm just going to run through some results and kind of what you can expect from trades that we take. This is 2023. I just go back to 2023, investing $2,000 in each trade taken in the Compass or the SPY Super System options room, produced a profit of a little over $60,000. Pretty good. In 2024, the same 2,000 in each trade produced about $55,000. Again, the total profits on the year are going to be dependent on what kind of market you're trading in. Obviously, choppy markets are going to produce less profits than trending markets. So there's a lot of variation that goes into that, but pretty consistent results. Our results are very consistent. This I wanted to point out. This was something I'm pretty proud of, and it's something that this is what we did in April when the tariffs were put on, and then 2 days later they were paused and taken off. The market had some just vicious volatility. If you didn't remember that, really vicious volatility. In fact, if I let me show you here what happened. I want to go back to, this is important because back in April, I know a lot of retail traders who basically they get busted out of their business. They're in retail trading. They were trading for years, and at the end of this period right here, up to here, back down to here, they got wiped out. They got margin calls, their accounts were destroyed, and they got killed because they went short here when the tariffs went on, and they was short when the market opened. When they paused the tariffs, you can imagine the damage that this green candle did to the shorts that were in here, right? So then they jumped in long, looking for a continuation, and then the market pulled right back again. So they were done. I mean, they were done. I know a lot of retail traders who gave it up after that, all right? And the reason I'm pointing this out is what we did during that period of time. We only had 4 high probability trade sets on trades on. While the SPY was down over 10% during that week, we had right here we had AVGO, okay, we had NKE, we had Sarepta, and we had NNE, right? This is Broadcom. This was a chip stock. We entered for $75 a contract. We closed it for $1.04. Got in on the 28th, 39% profit, $754 profit. On Nike, we entered for $285 and we closed it for $9. Remember, Nike was impacted by the tariffs because they make most of their product in Vietnam, and there was supposed to be a 39% tariff on Vietnam. It created the stock. It actually absolutely created the stock, and I'll show you the chart on this one. In at 285, out at $9, 216% profit in a really short period of time. Sarepta, we did the same thing, in at 450, out at 800, 78% profit, and NNE. These are the only 4 trades we had on during that time period. They were in the alert service and in the room, the only ones we were on. And you can see the percentage gains we had while the market was down 10% in 2 days. All right, so this is how trading the market and trading with the market and trading with the highest probability trade setups, this is what it can do for you. Okay, just for the current months, I'm going to go back into 2024, but I want to show you what we've been doing here in the summertime. This was June, just gone by. And again, I was on vacation for 2 weeks in June, so I wasn't in the room for 2 weeks. But we had, you can see we had 11 trades, 10 wins, 1 loss, 91% win rate, $3,790 in profit. Just a few number of trades like that. July, this was a huge month for us. July 2025, it just ended last month. These are the trades. These are all the trades we took. You can see we had 3 losses. AA, we had losses snow, and we lost 100% on VST here. That when we get a news event go against us, so we lost. Not much you can do about it. But you can see the percentage gains. These are the kind of gains you're going to normally see. 40%, 32%, 52%, 21%. These are not, notice we're not looking at 200, 300, 400%. I don't say that because you can't do that consistently. And I say this because there's a lot of rooms out there and a lot of webinars out there that tell you that you can make these ridiculously large gains and like there's no risk involved with any of that. You can't do it consistently. They're very, very, very stressful to try to trade like that. So here's the percentages you can expect. So this was July. July we did 30 wins and 3 losses. Again, 91% win rate, which is pretty high. Typically it's more between about 85 and 88, but we did 91% in July. 2,000 invested in each trade, produced $16,829. I mean, this is a pretty healthy annual trading income for a small trader. But we did 16,829. Here's August so far. I didn't list the trade yet, I haven't had time, but 20 wins and 4 losses. We just closed the month out yesterday. 84% win rate, a little lower, but right in the range. 2,000 invested in each trade, produced $5,960. Right, so those are the last 3 months. Pretty nice, what we produced here. Again, if you're in here for June, July, and August, you made about 3,800 and about 17,000. That's about 21,000, and about another 6, about 27,000. I mean, that's really, really good. All right, so here's January 2024. Now, again, I'm going to show you the results, and I'm just going to zip through these things. I want you to think about percentages. This is what's important. How much are we making on these trades? You're going to see this over and over again. 10%, 43, 37, 32. These are the kind of percentages you're going to see trade after trade after trade after trade. All right, 20 wins and 2 losses in 2024 in January, 90% win rate, 7,500. February, 24 and 2, 92% win rate. the alerted trades. We had 20 wins and 2 losses. We don't have as many alerted trades as we take in the room. Obviously, we can't take some of the very quick trades we take in the room and put up alerts on them. But again, 20 and 2, pretty good. And again, a 90% win rate. So here's the percentages here. And again, we made 11,745 in the room in February. This May, I just wanted to point out some time spreads. These are time spreads on earnings, debit spreads here. We mix them up. Most of these are just straight calls and straight puts. 15 and 2, 88% win rate. June, 86% win rate, 7,500. July, 85% win rate. Just it repeats. We did have 75% here. This is pretty low for the room, but again, they still netted 3,300 for the alert trades. August, yeah, decent month, 89. September, my losing trade last year. Losing month. This was the only month I had losing trade last year. A losing month last year was in September. 8 wins, 5 losses, 62% win rate. Embarrassing to me. I mean, absolutely embarrassing, but that's the way it was. And I want you to see that this is the only losing month we've had in 2 years. 8 wins, 5 losses, 62%. We lost $1,700 in the room. We lost $295 on the alert service. But we come back the next month in October and 85% win rate, up 7,400 and up 6,000 in the alerted room. So that kind of swamps these losses that we had here. But we do have them. So we just want you to be aware of that. Richard, so do I scan in the S&P and NASDAQ at any point in time to look the best trade candidates based on your system? Yeah, I mean, I'm scanning when the scans are going, they're running against either all the S&P 500 or all the stocks in the New York Stock Exchange. And then and only the ones that meet the certain criteria are going to pop up on the scans. I can scan through 6,000 stocks. I have other watch lists that I have certain stocks that I'm looking for, but yeah. Do you use ThinkScript or Ninja to develop code for your system graphics? I assume ThinkScript. I don't write the software. I'm a trader, man. I trade. The technicians at Rightline, Sergio and Charles put the indicators together based on criteria that we specified that we wanted, and they do that work. So I'm imagine they're using ThinkScript. Ninja does have a code that they use also over there. Same thing to develop those kind of things. Okay. All right, so there's October, there's November. I'm not going to go through each one of these. This was January through April. I was just trying to recap our trades so we could see what we were done. Again, this was January this year, 84% win rate, 89% win rate. In February, March, 83, April, 85. This is, you can see that I'm just trying to show the consistency of this service. Now, this is just a kind of to show you if you're thinking about the alert service, this is what it's going to look like when you get it. This is that Nike trade we talked about, but this is what the alert would look like. The original alert would just say 328, the date, NKE for your ticker, buy April 11th, 67 puts for 285. That was what the only alert that I sent out. Now, once we were into the trade, then I sent out another alert that says the same thing, but then it's going to say sell order for $9, telling you to put a sell order in for $9 on the trade. And then when it's sold, there's another alert that tells you they were sold for $9 on April 3rd. Right? That's the whole alert. And there could be other ones after the sell order if I make adjustments to the price. We might adjust it up or down based on something we see. But that's what your alerts are going to look like. All right, how do we achieve these stunning results? I think we know now, right? We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. That's what we're trading. We're just trading what the institutions are doing, that's all. So we only take trades when both of these are in our favor, allowing us to align our trades with the institutions in the market. Now, I will take trades when the institutions are in the trade and the market internals are neutral. As long as they're not going against the trade, I'll take it based on the institutions being in there. And how does it identify when institutions are creating a trend? We do triple screen assessment. This is a fancy way of saying multiple time frames. We do it on momentum, trend. There's also some money flow that's calculated in there. But momentum is the key thing to me. This is the thing that we show on the chart, and this is the thing that you need to really focus on. All right, so we've seen this already. There's the SPY Super System on Thinkorswim. This is another new template. If you get the SPY Super System, this comes with that template or with this template. And this template only shows current time frame momentum. These are for folks who are trading intraday trades. Just checking 5-minute trades off the SPY, the Qs, the IWM, or stocks, or the futures. This is what you would use because this is all you're interested in off a 5-minute chart is the current time frame momentum. This is it. You get that, you get the actual oscillator, you get the VWAP, you get the 15 EMA, and you've got your compression break bar arrows on you. That's all you need. So both of these will come with the software, and you can flip them back and forth during the day if you want to. Okay. This was a trade on the SPY right here. This was a SPY super system trade. This is a 5-minute trade off of a SPY super system. We took it right here. Right. You see where it's compressing across 15, and see how it breaks down. You see how it goes from buying here, green to yellow, selling right here. This is where you take the trade right there below that 15 EMA. Right, and you just ride this thing down. As long as the price stays below the 15 EMA, I mean, does not close above it, then you stay in the trade. And you can see how you can stay in this trade all this way down. You still be in the trade here. It's still below the 15. It's still moving down. This is where you took it. Notice it went yellow. Then it switches over to red, even more selling. Institutions are selling the heck out of this thing on a 5-minute chart. All right. I want to talk about this. And again, this was a SPY super system intraday trade. This is a 5-minute chart, not a swing trade. This is what my results are using the SPY super system methodology on a 5-minute chart only, right? And it's important to understand, these are my results. I share the results. I share the trade setups when I see them, but I can't see them all because I'm doing other things and I can't post them. So, but these are the results I had using the SPY super system trade since I started it last July. All right, and these are my results. Your results could vary, obviously. I've got people who make more than I do, take a lot more trades than I do, people lose more money than I do, but this is the results I've had. And you can see the number of trades is a lot. 16-0 in July, 56, 6-2 in August, last August. 56 wins, 6 losses, 2 break evens. So you can do a lot of trades because they're very, very quick. Right, September 43-2, and you can see these numbers. With the SPY super system, these SPY super system methodology trades on a 5-minute chart, you only have one trade on at a time, and they can be very short duration trades, and you need to watch it. You need to watch these trades, okay? And this was November, this was December. I'm not going to go through every one. You can see the results I had. These are my results, 93.70, 10,000 in December. Now, it's important to understand that the SPY super system methodology trades that I call the SPY super system methodology on 5-minute charts are intraday quick trades. The profits there aren't intermixed with the profits from the room. I traded the SPY super system 5-minute charts off the SPY Qs and IWM in October, and that's what I made. This is what the room made, and if you were in the room and you took every trade, this is what you would have made, roughly. It's going to be right around the same because these are the ones that are posted and alerted on. These are the ones that I let you know on. I spot, but I can't post them because sometimes they'll only last one candle. Okay, but a lot of people wanted to be able to do this, which is why we included it. There's a lot of folks who like to make quick trades during the day. They don't want to sit around and stare at the screen for 2 or 3 hours. So you can do SPY super system trades because most of the time during the day you're going to get at least 3 or 4 of these setups that occur. Right, so this was November, again, good month. December, good month. I haven't had any months losing as a SPY super system trade. And so this was the last quarter of last year. The SPY super system trades result 87% win rate, 24,000, 44 wins and 7 losses, 86% win rate in the room trades, and that produced 17,774. Right, so again, my trades. This is the room trades. Just remember that. These are not. I can't vouch that this is what you would have done. But in the room, I can vouch that this is what you would have done. Okay. Lana, when I talk about being in the room, you mean Discord? Well, we have a Discord room, but my room is a GoToWebinar room where I'm up every day. I have the SPY super system chart in the webinar. You log in as a member. You come into my room and you're there, and I talk to you all day long. I answer questions. I post trades. That's where most of the questions come to me. Now, we also have a Discord room where we had 2 other professional traders where you can discuss trading with them as well over there. But my room is a separate GoToWebinar room where I post. I have this is what it looks like. This is what you see when you come into the room in the morning. It's got the SPY super system up here. It's got all the scanners, and I'm talking about all these different charts that we have here. And if you have a chart you're interested in, I just put it up there and show it to you and talk about it and basically analyze trades. Okay. This is SPY super system trade. I'm going to talk about a few of these SPY super system trades, but I'm going to zip through these because you'll get the idea here. Again, this was way back last August, and this was before I had that single template layout. This is just saying for this trade right here, this is where we took it as the SPY current time frame momentum went selling to buying and popped out of the box right here with this pop out of the box over the VWAP, took the trade right there. Only looking at current time frame momentum. These other indicators don't matter, right? This is an old one. This is not even there anymore. I turned that into the actual oscillator. But here's where we took the trade, and you see what it did. It ran up, and then we start getting wicks and tails, and we get out right there. $220 profit per contract on the SPY super system trade. This is a quick trade. This is not a swing trade. All right, so we want to keep that in mind. Right, this was another trade, very quick. See, we had selling right here. It broke down below the 15. I took it here. I get out right here. Just 2 candles. That's what I talk about. Quick Heiken Ashi, quick SPY super system trades. Right, and again, here it is right here, the one we just looked at. But I'm only using the one indicator, the SPY super system current time frame momentum. See, it goes buying to selling. Take it here. Boom, boom, out right here as it bounces back up again. Right, here's another one here with that new template. Again, you're only interested in the current time frame momentum in these short-term trades. We'll look at some swing trades here in just a minute. Richard, so I say about 30 to 50 trades were made using your system for regular market day trading. Yeah, I mean, that's probably a reasonable number for a month. Yeah, that's probably a reasonable number for a month. I mean, some days, I think I only took 1 or 2 yesterday, but I don't, I'm doing other trades and I'm answering a lot of questions. I have traders that probably do 100 trades a month on the SPY super system trade because they're just quick trades. They're in there for 2 or 3 5-minute candles and out. But you got to be very specific about the setup. The setup needs to be specific. One of the things that you need to try to have is a trend in the market that you can follow. If you've got a trend in the market that you can follow, then it's that's much easier to make some decent money on those because they won't be chopping around so much. Am I talking about how many per day trades? I would say when you're talking about how many per day, I would say on SPY super system probably 2 to 6 would be a reasonable amount. It depends on the market. Depends on whether you have a trending day and how many pullbacks you're getting, etc. But 2 to 6, I would say. And if you're just looking for those, maybe even more than that, because I can't watch them all day long. All right, SPY super system trade, 5-minute chart. Again, you can see the entry here, compresses, bounces up here, pop out of the box symbol, we take it. That produced $130 profit on the SPY. This is one on the IWM. You notice we went from buying to selling back to buying right here. We went to buying as it broke. Now it just kind of moved sideways for. We're not making any money in this trade yet, but it's staying above the 15. And then we get another pop, and then it starts to move up, and it keeps going. And notice it stayed green the whole time. The institutions are in this thing. Then here they come. They're coming out, and you see what happens. As soon as they come out, down it comes. Another nice trade here on the IWM for $120. Again, compression. Everything's red. They're selling the heck out of it. Just ride it on down. Another IWM to the upside for $150 profit. Went from red right here to blue. What do I wait for? I wait for the compression break. I get a compression break off the VWAP right here. I can't take it here because it's red. I can take it here because it's blue. And that's where I take it, and that was another nice trade. All right. And here's another one on the SPY. I don't even put the arrows in here. The reason I put this in here was to point out something about VWAP. This is where you could go long. You see how it goes selling to buying? But you notice where it hit. It went right to the pink line, the VWAP. You can't take it there. You can't take it here. It's doing a doji. It has not closed above the VWAP. This is where you take it right there. It's blue. It's breaking above the VWAP. You take it, and you get 1, 2, 3, 4, 5 candles, and you're out. All right? That's your trade. That's your SPY super system trade right there. Okay, and there's another one here. This one I traded to the downside right here. Notice how it's red, selling, current time frame momentum. It breaks below the VWAP. I take it here. I write it down. I get a pop here. I get out. Then it comes back up above the VWAP. Notice the turns go from selling, turns back to buying right here. Institutions are back in buying. I take it here. and I ride the thing up and I get out right here at this pivot point, the white line pivot point right there. Nice little trade on the spot. Okay, so I traded it short and I traded it long. And this is another one. You can see these. Again, I didn't show my entries and exits this. I want you to be able to see them. But you can notice here it's green, right? But it goes to selling right here. So this is where you take it. As it breaks down below the 15, you take it right here. As long as it stays below the 15, you stay in the trade, take profits whenever you want. This is where you would likely get out, right there. All right, so those are SPY super system trades. Now we're going to talk about swing type trades that we take. These are ones that go out, most of them go out on alerts. These are ones that you can take and you can stay in them overnight. These are the ones where the daily chart needs to be bullish if you're going long, bearish if you're going short, and you need both the current time frame and multi-time frame momentum to be aligned when you take this trade. All right, now this was aligned, ALA. Now we did this on a 5-minute chart, but we also needed the daily chart to be aligned for us as well. But here is ALGN. We took the trade right here, right there. You see how it breaks below the VWAP, and you see how it goes compression and breaks down, and you see how it goes from selling, buying right here, green to yellow. Institutions just stepped in right here. They stepped in to sell. So we take this thing and we ride this thing down, and we made 51% in an hour right here on this trade. Right, breaks down below the VWAP. As long as it stays on the way down, we don't move back up toward the 15. We just stay in it, and this is where we get out right here, 51% an hour. Notice that the selling just continued, and here they come, buying back in again. You're out before that happens. All right, this is URGN. We just had this as a swing trade not too long ago. We took URGN right here. Notice the compression. See the red, the selling right here? And this is a daily chart. Current time frame, multi-time frame was already buying, but we were looking for the current time frame to align with that. Once that aligns right here, it goes blue. We look for a compression break, which we get right here as it pops right out of this compression with a nice candlestick. We take this trade, we ride it up, and we get out right here on this nice pop. Didn't go far for 3 days, and then boom, we got it. But we knew that it was likely to move up because the institutions were buying this whole time, even though the stock was going sideways. This tells us that there's likely to be a move to the upside because the institutions are still in there buying. NVIDIA, another one, beautiful one here. This is one on 8.4. We took it. I showed you this one where we have current time frame, multi-time frame momentum on the daily chart. Institutions buying, buy it right here, get out right here. We got it right here on this pop up in the morning. I have a rule that you follow that I mention in the room all the time. Gaps are gifts. That means if you're in a long trade and you get a gap up in the morning, market opens with a gap up of 2, 3, 5, 6, 8, 10%. Take your profits. Gaps are gifts. Don't get greedy and try to stay in the trade and milk the thing for more. Because what happens with gaps most of the time is the gap and go, which is the gap and they keep moving. That happens less than 1/3 of the time. 2/3 of the time, gaps turn into gap and chop, or gap and move down, right? So there's 2 things going against you when you do that. So why not take the profit when you get a gap up? Because there's 2 reasons to do that. A, you've got a profit, and B, the volatility on the option premiums has got jacked up in the morning because of the gap. In other words, that big gap up will spike the volatility in the option premiums, which means you can collect more money at that level than you would if you waited 10 minutes and the stock stayed at the same level. At 9:31, if the stock's trading at 100, and at 9:36 it's still trading at 100, you would have collected more money at 9:31 than you would collect at 9:36, even though the stock price is the same, because the volatility got jacked up into the premiums at the open and is starting to pull off as the stock moves sideways. All right, something that a lot of people don't think about. That's why gaps are gifts. Please take profits either way. If you're short and it gaps down, take the money. All right, SMR right here. This was one we took. Again, selling here, buying here, we buy it here, took nice profits in that. Nike, this is the one we took back in April when the big volatility happened with the tariffs. We took it right here on the 28th. Some people actually took it off because we made money on it that day, but most everybody, I stayed in it. Most everybody stayed in it. Here's where the tariffs went on. Here's the drop down. Gaps are gifts. Look at that gap. Gaps are gifts. We were out right on the open, right there. We were out on the open on this gap down on Nike. And then you see it pulled right back up again the next day. In Sarepta, we were in. This is another one we're in on the 28th. Again, this moved down beautifully. We had nice profits on this. Look at the institutions. It's so easy to see that they're selling this thing. Okay, this was HMS long. This was a nice one too. This is a swing trade, daily chart. Institutions buying, they certainly are. And I probably should have caught this earlier. I didn't. I took it here. I don't know why I didn't catch it back here. I probably wasn't noticing. This is a VWAP that doesn't make this. You don't pay any attention to this on the daily chart. Here's where I took it, and I get out on this one for 25% profit, and I left the runner on, and it produced 269% profit for me on some contracts, but I don't report that anywhere. I don't put it in my results anywhere, but it's just kind of an aside. Palantir right here, nice pop. All right, yellow, selling, green, buying. The institutions start buying right there. We take it, we write it up. All we're doing is following the institutions. Institutions are back in, so are we. Lulu, big gap down in earnings. What I'm waiting for here is for the earnings to kind of flatten out. And this is where we took it. Is it flattened out? And you notice it went on the multi-time frame. Notice it went from selling to buying. There was some institution buying right here. Nowhere else, but right there. But then it went right back to selling again the next day, where we took it and we wrote it down. Overnight, in for 192, out for 300. Amazon, a nice 5-minute trade here. This is a SPY super system trade on Amazon, which we took right here. I don't know why I didn't get it here. Oh, I didn't get it here because it was yellow right here on the current time frame. Then it went green. Took Amazon, ENPH, another nice short. All right, so you can see these. I'm not going to go over a million charts, but I think you can see here that ENPH, the institutions are selling it. So where do we take it? We get a break out of this compression. We take it right here. We make 20% in an hour. Verizon, 50% in an hour on this one. This Verizon doesn't usually move that much. It was a beautiful trade on Verizon. Again, are they selling it? They certainly are. In Tesla, this was an overnight trade where we went from 120 to 112. Gaps of gifts, we took it. All right, so those are the charts. Those are the strategies. Let me just look at some questions here. Richard, the stocks you trade are only traded during regular market hours. Yeah, generally speaking. Now, if you're using the SPY super system, if you want to trade futures, you can trade futures after hours on that. And all you do is just put in the indicator, that the symbol you want. If you want to use the /ES or /NQ or /CL, whatever indicator you want to use, or /RTY, you can trade futures after hours using the SPY super system, because it'll work for that. In other words, if I throw up the chart here, all right, and this is after hours, if I throw in /ES, right, there's a /ES on Friday. Here's Friday, and you notice we go to Friday. We got to go to the futures. You see how, whoops, I'm way back here, wait a second. But it'll stay up there. I allow the Thinkorswim platform to show after hours trading on the futures. So if I go back to the previous night, all right, here it is in the like 5 in the morning right here. So you can use this on the ES, the NQ, the RTY, the CL, any futures that you want, or even commodities for that matter. Okay. Yeah, it works with futures, absolutely. Yeah, it works beautifully with futures. Okay, so here again, here's the strategy used in the room: straight calls, straight puts, straddles and strangles, non-directional trade, debit spreads using weekly options expiration. This is a really good trade, really good strategy. Very few people seem to understand that using weekly expirations is a much higher ROI than going out 2 or 3 weeks on debit spreads. Time spreads, as I mentioned, weekly ATM, we have one of these on right now. Credit spreads and the SPY super system, the results for these are the ones that I took, but anybody can do it if they have the SPY super system, or if they're watching my SPY super system in the room. You can take the trades and just be looking for those. All right, so I'm going to talk about let's see here. Have I thought about automating the system using your entry and exit points? See, here's the thing. For me, there's too many nuances that go into making the trades that I take. If I'm doing a SPY super system trade and I'm saying, okay, the SPY, the current time frame momentum is blue or green, the stock is breaking above the VWAP, I've got to be able to look at the price action leading up to that. I've got to know what the market's been doing up to that. Is it a trending market? Is the market been coming down and now it's just bouncing? Is it likely not to continue? there's a lot of nuances that go into taking those kind of trades, right? When you automate, you've got to be able to make the identification of exactly what you're looking for. And it gets, just for me, all right, it's easier for me to see it and make a decision based on that and try to figure out all of the different contradicting things that are going on in the market, that if one of them is not lined up right, you may not even have thought about it, and you look at the price action and say this doesn't look right. No, there is some subjectivity to it, Richard, in my opinion. Okay, use my AA, buddy. So I again, a lot of people like to do the auto trading, and again, I'm much more confident in being able to make the decision myself on these kind of trades. That's how I've done it. I've been doing it for a long time. Okay, so this is the offer we've got here, and this is the last weekend of this. They've had this special offer on for a couple of weeks here. This is really an outstanding offer. And if you're interested in the software, you definitely want to take advantage of this. But a couple of things here. You get a free 2-week trial. You get the alerts. You get the access to my trading room, and you get access to all the training modules I've done. There's about 31 of them now on all the different strategies you use, how to use the indicators, what they mean, etc. You get all of that for 2 weeks, and then it switches over to $396 quarterly after the 2-week trial. Okay. You also get a one-time payment. This is just for the alerts. This is for one-time payment is lifetime. This is all the alerts, $24.96 for the alerts in the Discord room, in my training videos. This is the one here that to me, this is like a no-brainer right now. This is good through Monday. You get the SPY Super System software. You're actually going to get the software, the SPY Super System software. It goes on Thinkorswim, and Brightline will put it on there for you. You don't have to do anything there, just to put it right on your Thinkorswim platform, and it's going to look exactly like mine. You get live trade. You get access to my live trading room for life. You get the SPY Super System forever with all the enhancements. You get access to my room for life, and you also have the get to see all the training videos, and you also have access to the private Discord room that we've got. Right, this is $2,496. This is set to me. This is such a steal because the software itself is worth way more than that for trading. I mean, you've seen what it can do results-wise. This you have yourself, and you have it yourself. You can trade whatever you want on it. You can be in the room, not in the room, but you get access to the room forever. This is $24.96. This is excellent, and this is going to end. It's actually not going to end Sunday. It's going to end on Monday, which is going to be Labor Day. All right, so that's those are them. Now, if you look at the chat box, it's got the link to all of the alerts here. Not the alerts. You get access to all of the special offers that we've got. Sorry, I'm getting a little hoarse, but I really have to emphasize this thing. Listen, I'm not a marketer. I'm not a professional presenter. I'm a professional trader. I trade. I love to trade. I look at charts all day. I look at charts all night. Been looking at charts all weekend. I look at charts all the time. I love creating strategies. I've created a lot of these strategies myself, and I don't even suggest a strategy unless it has at least an 85% win rate or higher over at least 100 to 200 trades live money. I do all my trading with live money. But I can tell you this software right here made a big difference when I purchased this. I purchased this before I was involved with this at all. I purchased this when I was looking for a way to identify institutional trading, because institutions I knew were writing algos that were busting some of the strategies that retail traders use. And this is why to me this is such a no-brainer. But again, it's up to everybody. I'm just trying to find ways to help people become consistently profitable. Richard, if you're interested in that, call Rory. And I'll mention this right now. If you're interested in buying something or getting a combination of these or a different type of time frame, call Rory at 786-732-4656. Okay, he'll tell you, you tell him what you want, he'll tell you what they can do for you. All right. I can't list all these things on here, but you call him 786-732-4656, and he will. You tell him what you're looking for, he'll tell you what he can do. All right. But that deal right there is, I mean, this is outstanding, really. You get the room, because in the room, I do a lot of training in the room. One of the things I do all day long is talk about strategies, talk about criteria, look at a setup, talk about why it's a good setup, why it's a bad setup, all these kind of things. You know, why should you be in this trade? Why should you not be in this trade? And people ask me all the time about those kind of things. I mean, is this a good trade? Should I be in this trade? All of those kind of things. And you know, I spend hours on every day talking about that. I do take an hour for lunch. I can take a little bit of a break. But I love trading. That's what I do. So again, I hope what we talked about today can help you trading. Obviously, you can learn about Heiken Ashi candles. I hope that helped a lot too. If you buy the software, do you get updates in the future? Yeah, you get all your updates. Any changes to the indicators, to the platform, any new additions to scanners, all of those come to you. Anybody who owns it lifetime gets those forever. Okay, you get them forever. All right, so that wraps it up. Again, it was fairly long. I'm sorry it seemed to take so long. I do like to spend some time on things. Lonnie, you're welcome. Thank you for being here. I appreciate it. Richard, I'm glad you liked the presentation. Again, like I said, I'm not a professional presenter, but I tried to cover as much as I can. You know, I really believe in what we do here in the room. The software is just outstanding. It makes a big difference in trading. If you learn to use it, it's going to improve your trading. I mean, it's simple as that. I've got people in my room that have been with me since the first week I started and still here. So again, I appreciate all the support I get. All of these, we have a lot of folks in the room who are really professional traders now, and they're looking for trades all the time. And we get a lot of trades recommended through the room, and we'll take a lot of trades from members now. So it's very, very encouraging to see that. All right, thanks a lot, Flynn. Thank you very much. Look forward to seeing some of you folks in the room next week. Take a serious look at that software. This is really this is not going to happen again after Monday. So take advantage of it. You know, you may wish you a month from now, you may wish you had got it. So take a look at that. And again, I appreciate everybody being here on a Saturday. I know you're giving up part of your Labor Day weekend to listen to me, and I appreciate you coming. And I hope what I've done today is going to help you become a better trader. All right, have a great weekend, everybody. We'll see everybody hopefully on Tuesday. Remember, Monday the market's closed. Tuesday is the first trading day of September. September is going to be completely different from August. We're going to go out of the August doldrums back into some serious trading come September. All right, everybody, have a great weekend.